All right, everyone, here we are with ticker symbol RIDE, Lordstown Motors Corp. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Lordstown was in a very bearish run yesterday. I had stated if it broke through this support, that was one of the lowest points in this bearish run, and it would hit newer lows. Now, the bulls reappeared. They broke through resistance several times in the day, but they could not hold up above it. We're still below the 50-day moving average, meaning that we are in bearish territory. The 50-day moving average is 1616. I'd write that down. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. So the bulls did a good job at holding up here and stopping themselves from hitting newer lows. But we are still in bearish territory. So let's look at what's important for tomorrow. Our resistance has slightly changed, and this is going to be a very narrow stretch. And we're going to look at one of the lowest points of the day before it actually ran up. And then we're going to look at one of the highest points after that run and how it acted in the last couple of hours. Now, I do want to talk about this also a little bit broader. And I want to go back to yesterday's support level. Let me go back so we can get that to the T. 1356, super important number. Keep that in mind for the next coming days and the rest of the week and the beginning of next week. Now, there's a new support level, and we're going to talk about that in just a second. And the highest point reached here in this bullish slight run here was 1542. That's important as well, because if this resistance is broken through, then this would be the next point to go ahead and use as a point of reference to then see if it bounces off of that to reach the 50-day moving average and get back into bullish territory. So these are stair steps to get to the goal of the bears, not wanting this to go that way, but the bulls working their way towards what they want, which is getting back into their territory and bring this one back up to newer highs and new resistance levels. So let's look at our resistance level for the bulls to get to the 50-day moving average and get back into bullish territory. The first one and closest one here is 1515. This is currently trading at 1476. 1515 is the resistance level that the bulls need to break through, turn that into a support, and break away from it to get closer to the 50-day moving average to get back into bullish territory. So if the bulls break through this, it does not signify that they've gained control. We're still in bearish territory. They won't have control over the chart until they break through 1616. On the other hand, we have what the bears want. And the bears want to break through this support level. This support level is super important for them, and that's 1405. If 1405 gets broken through, this could be well on its way to newer lows, pulling further away from the 50-day moving average in a downward direction. So bear that in mind and pay very close attention to how this stock is behaving. If it breaks through support and it's 1405, and if that support is broken through, this could be well on its way to newer lows and new support levels, pulling away from the 50-day moving average in a downward direction. Now, the bulls can reappear and try to bring this back up. So that's why you want to pay very close attention to the inflow, the outflow, and who is dominating the charts as it's going down that way, and if it crosses it, and how is it reacting and behaving below it. As always, if you guys found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up Like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.